Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I'm Muralidhar Swaminathan. Joining me on the show today is Abhinav Angarish, founder, Invest Online. Abhinav, welcome to the show.
Thank you, Murali.
Once again, markets are volatile. We saw some recovery in the morning, then that's got sold into. So it's a bit of hide and seek. I'm sure mutual fund investors who are invested for long term may be safer. That's the impression we are getting, as long as they do it through SIPs, I suppose. Let me go directly to the first caller. M. Mohan is on the line from Chennai. Good afternoon, Mohan. What's your query?
Good afternoon.
Yeah.
So I'm investing since 2015 December.
Yeah.
The following funds, each in 2,000 rupees. L&T India Value Fund, SBI Blue Chip, SBI Magnum Multicap,
Okay.
Mirae Asset Emerging Blue Chip,
Right.
all growth fund.
Okay.
So should I can wait for maximum 3 to 5 years.
Yeah.
This is only for the wealth creation. Should I continue with the same fund or anything to be added fresh and delete from the existing one?
Right. Abhinav, your
There is
thoughts?
a second query.
Yes.
Yeah, there is a second query.
Yeah.
I am also investing in 1,000 rupees since 2015 December onwards. Tata India Pharma and Healthcare. Should I continue with that?
Right. Abhinav.
What Mr. Mohan has really done is he's created a decent portfolio. He's a
Right.
mix of a value fund, a large cap fund, a multi-cap, large and mid-cap and so on. The problem is here. Now he started in 15. I'm
Yeah.
sure his concerns are because he's probably not seeing any returns coming in.
Right.
So technically he's assuming that he's invested for 3 years.
Right.
But see what happens typically in SIP is that because you're buying on a monthly basis, your average investment is not that long.
Correct.
So 3-year investment practically looking at a 1.5-year investment. You can't make money in markets in 1.5 years.
Absolutely.
So 3 to 5 years more should be advisable, of course.
Yeah.
Longer he can should be better. I don't think he should restrict his period of investment. Tata India Pharma and Healthcare Fund, now if you see the returns comparatively to other markets looks, to the other investments
Yeah.
looks fine because it's a pharma based fund, right?
Right.
But so it's more hedged in these markets, like how pharma always behaves. So it will do better in these markets and may not do as well when markets are doing well, right? But it's a sectoral fund, end of it. A 1,000 rupee investment could be fine, but it's not going to really add value.
Right.
You're in SIPs averaging anyway. Might as well been better diversified equity schemes than being in sectoral funds. I don't think it really makes sense to be hedge it if that's what he's trying to do. So
Right.
might as well he could add to one of his like multi-cap themes. So he has a SBI Magnum multi-cap. He could probably add to that if he likes. But otherwise, I think you should continue for as long as you can.
Right. Continue invested, Mr. Mohan, in whatever funds you have. Maybe the advice is that from healthcare and pharma, you may want to shift it to one of the other diversified funds. Does that answer your query, sir?
No other queries, sir. That's all.
Okay.
Thank you very much.
Welcome.
Thank you.
All the best. The next query is from Kannan. This is from Kerala. He's 37 years. He is investing through SIP, 6,000 each in Reliance Small Cap, 4,000 in Mirae Asset Emerging Blue Chip, and 2,000 in Reliance Focused Equity. His aim is to create a corpus of 75 lakhs after 20 years. Should he stick to these funds or switch?
You rarely find such questions which
Yeah,
have satisfying answers. So from the perspective of the amount he's investing, he's fine. He'll be more than achieving his targets. Even if I take a conservative number of say 12% per annum kind of return, he'll be at like 1.2 crores beyond 75 lakhs. And if it does achieve 15%, which is fairly possible in this period, it'll be more than 1.75, 1.8 crores. His schemes are perfect. I would not recommend any change. He has a focus fund, he's a small and mid cap and large cap fund. I think he's well diversified, great portfolio, continue. Monitor it 6 months to 1 year to at least see how the funds are performing per se. But I think he's well on track. I don't see any stress in the portfolio.
Okay, good portfolio selection, stay invested, and the target and objective is easily achievable. That's the advice coming from Abhinav. The next query is, this is a call from Chandrasekhar. He's from Bengaluru. Good afternoon, Chandrasekhar. What's your query?
I'm Chandrasekhar from Bangalore.
Yeah.
I'm 60 years old.
Yeah.
I wanted to invest bulk as well as SIP
Okay.
for a period of 5 to 7 years for my daughter's marriage.
Right. Yeah, continue, sir. What's your query? Okay, I think the line is a little weak. Very clearly, he's 60 years old and he wants to stay invested both bulk as well as through SIP?
See, so I think he's in good times. If he has cash lying with him, rarely people don't at this moment.
Correct.
But if he does, then since markets have corrected well and quite decently, I would not say they're fantastic on valuations, but I think they're fairly good valuations. I would recommend to park 25% of the 3 schemes which I'll recommend upfront. And balance could rather go through STPs.
Right.
And the same schemes itself, he could also start investing in SIPs as well. I'm choosing more of a large cap and a multi-cap portfolio, more focused on large cap so that, because the period is 5 to 7 years. So like we explained the logic of average investing, it turned out to be about 3.5 to 4 years of average investment. So look at a Reliance large cap fund, an Axis blue chip fund in the large cap category. In the multi-cap, you could choose a Mira Asset India equity fund.
Right. See, he's setting aside money for his daughter's marriage,
Correct.
5 to 7 years.
Correct.
Is there a strategy of when he should exit and accumulate the necessary amount for the particular?
So let's assume a situation where, let's say his daughter is getting married in, say, December of XYZ year, right?
Right.
I would say at least a year before this date arrives, you should be sitting into cash or in liquid, so that you don't want to go through the volatility again. Whatever the returns may be, at least a year prior to that you should get, because you don't know where markets are going to turn.
Correct.
Let's assume a situation where there was someone getting married in December of this year and you're sitting in December of last year. You would be far better off than when you are. It could be other way around as well. Markets could move. But at least you have a number that this is the number I have, and this is what my expenses are, and this is the amount I will need.
And take out the amount that is required.
Correct. And you at least there will be volatility in your budgets as well in that case.
And don't get disappointed on the D date.
Yeah.
Biren Shah has mailed us his query from Vadodara. He wants to invest 4 lakhs through lump sum for a period of 3 to 5 years. He is expecting 16 to 17% returns. He also wants to start an SIP of 5,000 for a time period of 10 to 15 years.
Okay.
I think the lump sum amount that he is expecting is slightly on the higher side, I suppose.
He is, but considering that he's looking at more than average returns.
Yeah, and he's looking at 16 to 17%.
Correct, 16-17%. So I assume that he understands that these are more than normal returns. When the bank rates are at 7%, expecting 17% kind of returns. So, but his period of investment is fine.
Yeah.
I think he should look at being more into an aggressive kind of mid and small cap kind of strategy, so that it can help him yield these kind of numbers at least. Again, it's an SIP, so averaging will work, right?
Yeah.
So look at the L&T India Mid Cap or the Edelweiss Mid Cap Fund. These are aggressive mid cap funds. The funds, of course, if you see the returns today on an absolute basis, may not be great for the last 1 year. But since markets have corrected, mid cap index is almost down 25-30%. May be a good time to start. Of course, the SIPs will be averaging, but don't look at the 1 year returns, look at the long term story and the portfolios. They've done consistently well. So get aggressive if that's the return you're looking at.
So, but the lump sum he has to do STP or just invest in bulk?
I would say that you park at least 50% of it upfront.
Upfront, okay. You may not get a better pricing.
Yeah, because the idea is you're going to buy more units, right? That's the whole purpose of SIP.
Absolutely.
So if you're getting something 25% cheaper, then why not buy today?
Absolutely.
And then let the balance go into STP. That is still being safer. And then he's anyway investing for a longer period. So
absolutely. For the benefit of those investors investing in equity funds, here is a little bit of information. The correction that we have seen in the markets, it's more than 7 weeks now. And the correction based on Nifty is approximately 14 to 15%. And on individual stocks, it could range from anywhere between 50%, in some cases 10%. In the best of the companies, it's about 10 to 12%. But there are cases like housing finance companies and NBFCs, where value has been wiped out completely. So just keep that in mind while investing. You might find good mutual funds, blue chip funds, large cap funds, which are much cheaper than what it was earlier. So let me go to the next caller. Vikram is on the line from Udhampur, Jammu. Good afternoon, Vikram. What's your query?
Good afternoon, sir. Thank you for this opportunity.
Sure.
Actually, I have a monthly salary and other sources income of about a lakh a month.
Right.
And I'm already doing a SIP of 34,000 per month. And then I've used my past savings. I've done some 8 lakhs in Aditya Birla Sun Life Pure Value. And I've done in small Reliance Liquid of about 50,000. I've also done in Aditya Birla Sun Life Money Manager Fund about 6.5 lakhs.
Right.
And I have a Reliance small cap fund of about 4 lakhs. And actually, I'm a father of 2 daughters. One of them is doing medicine. She would be doing her MD in another 2 years. Another one, she's reading in class 6.
Okay.
So say after 5-6 years, I would need a lot of money. And I have invested in SBI, the series, and I have about 12 lakh rupees more to invest.
Okay.
So my first question is that, should I increase my SIP from 34 to say 60, or should I go use this 12 lakh which I have just got from SBI and put it in some fund? So I need advice on should I continue with SIP, increase SIP, what kind of SIP should I go for? And second, how should I put this 12 lakh rupees which I want to do it right away?
Right. Abhinav,
Thank you.
some detailed advice will be required
Yes,
here, I guess.
many questions, many answers naturally. First things first, he definitely needs an advisor.
Yeah.
On a permanent basis. We can advise right now, but going forward, he definitely should get an advisor on board. So he has his investments into ELSS is fine. You can't do much with it. It will help him in tax savings. So let's continue with that. I don't see the reason why he's invested in a money market fund. He's invested in a Birla Sun Life money manager fund. It's a pure liquid category kind of a fund.
Short term. Yeah.
Unless he has emergency, which didn't sound like. So I don't see the reason why he should be there. He'd rather do an STP from that money into an equity fund than just keeping it there at the moment. For his upfront investment, I would recommend him to be in the multi-cap strategy. So look at the Mira Asset India equity fund. His investment of 34,000 into Birla Sun Life pure value, why is all the SIP just into that monies? I don't understand. So if you go back to history and see the way the fund was structured earlier, it was showing very fantastic returns on absolute basis.
Correct.
These are times to actually revisit and see these portfolios as well. That's why the whole purpose of diversifying portfolios is essential.
Right.
You could even look at putting more money into the small cap category or the LSS since he's doing SIPs. He said 6 to 7 years more. He can definitely increase the amounts. Makes a lot of sense to keep increasing, and since he has liquidity. So I think yes, increase SIPs, get out of the money managers theme, reduce exposure to pure value from a pure SIP perspective, and diversify the money and probably distribute it across his portfolio.
Right. Vikram, you got it very answered?
Yes. So that means I actually need some good advisor who
Yeah,
can,
because in your case, you need slightly more detailed planning.
No, actually more, sorry, I'll
Yeah.
interrupt here. It's not about detailed planning. It can start and end, right? It's not
Right.
like a prescription you give when you do it.
Correct.
When you go to doctor, he says, please revisit me after 15 days, 2
Right.
months, 3 months or 4 months. So
Exactly.
you need more like a financial doctor to come and talk to you,
Right.
So, and this is an ongoing process. He may have something else coming up. He may have some liquidity coming up later. Now, he said he's into SBI series XYZ fund. If I'm assuming this is a close-ended scheme as well. What happens when it closes? Does the money come back to him? Does he need to switch the money? There's an ongoing, continuous,
Correct.
advice and hand-holding required. You could start with it, with one recommendation from here, but then what happens 6 months hence?
Absolutely.
So that's why you need someone to hold you.
Okay. I think all the best, Vikram, for your investments. I think we are running out of time. Abhinav, thank you so much for
Thank you so
joining
much.
us and advising viewers on how to save, invest and prosper. With that, it's a wrap on this edition of the Mutual Fund Guide. Stay tuned to BTVI for more news and updates.